Welcome to the virtual IMF annual meetings CNBC debate on the global economy. I'm Jeff Cutmore and we're broadcasting live from London. To our viewers tuning in from across the world on CNBC International and to those of you who are watching on the IMF's webcast, a very warm welcome. We encourage you to join in the debate on Twitter using the hashtag #GlobalEcon. And my apologies, I know we're a few minutes late starting here, but technology as always is tricky in these COVID times. Now, the world economy has been hit by the biggest shock of the post-war era. Governments have responded with unprecedented measures to protect lives and livelihoods as they grapple with a twin health and economic crisis. Despite improving economic activity in many countries, it's uncertain if we are out of the woods just yet. So what bold actions are needed from global policymakers for a strong and durable recovery? I'd like to pose that question to my panelists. Joining us now from Washington, D.C., IMF Managing Director Kristalina Georgieva. Live from Frankfurt, ECB President Christine Lagarde. In Jakarta, Indonesian Finance Minister Sri Mulyani Indrawati. And coming to us live from Geneva, Gavi Board Chair Dr. Ngozi Okonjo-Iweala. Thank you all for joining us here. So I just want to start with a reality check. Let's take stock for a moment, Managing Director. The IMF says in its World Economic Outlook we're seeing a modest improvement in the growth path here, but we have no US stimulus agreement. We just had a terrible weekly jobless claims number from the United States. We have no Brexit agreement. We have no vaccine. And importantly, infections are rising. I never thought I'd actually say this, but is there a possibility that your negative 4.4% for the global economy for this year is actually starting to look over-optimistic?
Thank you, Jeff. First, for bringing gender diversity to our panel, much appreciated. And let me go to your question. Minus 4.4% is less dire than we saw it 3 months ago, but dire nonetheless. For all the reasons you brought up, we face incredible uncertainty, and in that uncertainty, we have to zero on what policymakers can do so we can underpin recovery and come on the other side of this crisis. And what is it that we concentrate on? You put your finger on the most important action, which is health. Let's give ourselves some credit. We have learned how to function with the pandemic still around us by applying simple measures like wearing masks, social distancing, zeroing or through testing on where are the cases. And if you look at the one sizable economy, this of China, it is going to come on the other side of 2020 with positive growth, largely because of this determination to restrict the spread of the pandemic. And we also have seen massive fiscal and monetary stimulus, unprecedented and synchronized. So we have to give credit where credit is due, but recognize that until we have vaccines and or effective treatment, we are not out of the health crisis, and the uncertainty would be still with us. Everything we can do to apply measures that reduce the impact of the pandemic, even before vaccines, we must do. And then secondly, we ought to work together. I was very impressed by the membership up to now coming together. And I would say that this is our way forward to do all we can for support to households and to firms to be sustained until this durable exit from the health crisis. So to echo what you said, those who have fiscal space, please use it, and please keep monetary policy accommodative. And I'm sure that my very good friend and predecessor, Christine, will talk about it.
I will get to Christine in just a moment, but Managing Director, is it perhaps your greatest source of disappointment at the moment that Congress is unable to come up with a second CARES Act?
Let's remember that the US economy has two levers, monetary policy and fiscal policy. Of course, it is best if they are used together in combination. We have to recognize that in the first round of action, that was done very effectively. And of course, it would be highly desirable that the fiscal lever is also put in place. But we have a way to go with this crisis. We are going to have that need of using fiscal space, and thank God the United States has fiscal space, not just this month and the next. It will be necessary further down the road. So let's see how quickly it would be deployed, but I have no doubt it will be deployed because it is necessary.
Before the end of the year?
We are not the decision makers. It is in the hands of each of our members. The impact would be positive whenever it comes. So if it is earlier, of course, that would provide a boost to certainty. And certainty is something we do need in this crisis.
President Lagarde, if I could come to you on this, given this risk of a relapse that we see now and the balance sheet expansion that you at the ECB and the Fed and other central banks have already engaged in, and given where we are with the forecast for growth, has that balance sheet expansion been squandered ultimately? Have we seen real little benefit from the actions that you've taken so far, given that we're still projecting a negative 4.4% growth rate?
Well, I dare to challenge you on that little benefit. I would observe that it's been an unbelievable crisis, number one, which in terms of brutality, depth, but also very unusual source, meaning services in particular, which has contributed enormously to the recession, and consumption, which has also contributed significantly to the recession, two very uncharacteristic causes for such crisis. So given the magnitude of what we faced, all actors, including the IMF, I have to say, because Kristalina does not sing the praise of the IMF, but we're here for that as well. But all actors actually stepped up to the plate and did things that were totally out of the ordinary course of business. If I look at my own corner, to actually see fiscal and monetary policies work together in the same direction and support each other in many ways, number one. Number two, seeing all 27 European countries decide that they're going to borrow jointly in order to give grants to those most affected by the crisis was also totally unheard of. And I would say that the magnitude of the support that we put in place has actually produced exactly the effects that we intended. In other words, we wanted to stabilize markets. We did that. We wanted to make sure that the risk of fragmentation would totally go away. When I look at the current situation, it is certainly the case. And we especially wanted to make sure that the real economy, you know, the families, the enterprises, small, medium-sized and large ones, would have access to to credit, would be able to borrow from banks. And we've put in place huge programs in order to make sure that financing would be available without much restriction, because if I look at the interest rates at which corporates can borrow, roughly 1.5, the interest rate that families can borrow, roughly 1.3, and when I look at the increase of credit that has been available in the last few months, I would say it has been very successful, and it's exactly what we intended. Are we ready to carry on and continue to support as and when needed? Of course we are.
A lot of weaponry from the central bank armory has been used in getting us to this point. I listened to Jerome Powell's recent speech, and it almost seemed that he was begging for the US government to step in. Are we at a stage here, actually, where despite the claims, actually the limits of what can be achieved in both monetary policy and fiscal policy are beginning to be reached?
You know, I think that, Jeff, this is not the debate. The debate at the moment is, as Kristalina put it, it's about lives and livelihood. And we're still in the long grass for the moment, and there's still a lot of work to be done, especially as from this corner of the world in Europe, we're seeing, recurrences of contagion. We're seeing maybe a second wave on the horizon or hitting the coastline of Europe, and we'd better make sure that all the arsenal that we have available is actually dealing with this situation by adopting the right policies, increasing the fiscal spending, which is certainly being considered by many member states in Europe as they are presenting their budgets at the moment, and with our, as you said, the many weapons that we have available, ranging from interest rate to forward guidance and asset purchase programs, we stand ready. We have done a lot, and if more is needed because the situation deteriorates, then we'll do what is necessary.
Let's focus on the pandemic for a moment here, more specifically. Dr. Ngozi, if I could come to you, how concerned are you by the recent Eli Lilly and J&J suspension of vaccine trials? Do we now need to, in all reality, push the vaccine expectations to the end of 2021 now?
Well, thank you very much, Jeff. I just want to echo what Christine just said and Kristalina. I think the first and most important thing about this pandemic is health and saving lives. And so it's true that we've had this suspension, but I don't think we should become too pessimistic about the possibility of life-saving vaccines or therapeutics or diagnostics coming on stream. And I think the hope that perhaps by the first quarter of next year to the middle of next year, we would have something that works. I think that we should keep that hope. Of course, vaccines are not a magic bullet, and we can't guarantee, but the work that is going on so far looks very promising. But the suspensions suggest that there are more challenges than perhaps we initially thought. Probably, there may be, but remember that right now, let me speak about the COVAX facility and the work we're doing with the WHO, Gavi, and CEPI in the biggest solidarity effort on the health side. It's called the ACT Accelerator, which is an effort to accelerate the use of vaccines, therapeutics, and diagnostics. So looking at that, we've got a portfolio of 9 vaccines, 8 of which are under trial in various phases, and some in phase 3 at the moment. And we've got another 9 under consideration. So even though we've had those 2 suspensions, there are other vaccines that are being looked at. And so the idea of having a portfolio minor risk, I know that 1 or 2 or more of those will come on stream.
Well, I'm very encouraged by your words, and I hope we are going to make faster progress into next year, because the challenge, I think, as the WEO sets out, is not only for Western countries, but many poorer countries and emerging markets are still facing a, quote, worsening picture here. Minister, you've already raised money from development banks and the bond market in Indonesia to help you through COVID. But you, like many other countries, are now running out of options, it would seem. What next? Can you go back to debt markets to raise more money? What do you hope to do to help your population?
Well, first, we are all using the instrument and policy, just what Christine as well as Kristalina mentioned earlier, that this is unprecedented, this is extraordinary. So for Indonesia, when we hit by this COVID, we initially for 2020 fiscal year designed our fiscal deficit is only 1.7% of GDP. Our debt to GDP ratio is only around 30%. So we have a space. When we hit by this crisis of COVID, we enlarged the deficit to 6.3%. Certainly, this requires a huge financing. And we are very lucky because we still have an access to the market, although we saw the turbulence of the market in April. But even with that kind of situation, Indonesia, with a well-established reputation, we still have the access on the market. We entered the market even during those turbulence, right in April as well as June. And we have a very good rate because we also enjoy the global low interest rate. At this moment, we also work together at the local market and with Central Bank, Bank Indonesia, in order for us to have an extraordinary financing. This is unprecedented and we are going to use very carefully. It's not going to be reckless because we have to tell the bondholder rating agency that this is an unprecedented one-off intervention in which Bank Indonesia Central Bank can also buy the bond by the government at the primary market without also at the same time creating an impression that we are going to threatening the independence of the central bank. So this is unprecedented. We require really a lot of communication while we are also at the same time designing what is the right policy. Indonesia deploying this fiscal deficit first and foremost is actually to save the people's life. You call it life and livelihood. That's exactly what we are doing. So from the very beginning, we increased the spending on health to support social protection, enlarging it, as well as for the small and medium enterprises. Currently, we are going to watch what is going to be the corporation as well as financial sector stability. I think this is going to be one of the challenges in the next early years. And we definitely also expect vaccine. We are now currently working with at least 4 companies globally in order for us to get the first batch of the vaccine. So I'm more optimistic on the vaccine side, but certainly this is not going to be the end of the challenge because for even vaccine, in order for us to be able to also vaccinate, we have 267 million people in Indonesia. That will a huge logistical as well as planning to vaccinate people in Indonesia. So a lot of work still need to be done beyond financing side. But on the financing side, I do hope that we are going to get still continue an access of the market. The support from the Multilateral Development Bank is also very, very incredible during this time. They are immediately responding and even offering us financing, both from the crisis response as well as for the vaccine. I also am very thankful for the international financial institution, including IMF, who support in terms of signaling, because it's very critical. For example, when Indonesia, for the first time, having this Bank Indonesia or central bank and fiscal policy working together, we are not punished by saying that, oh, we are now going to monetize our debt, because this is very important. This is extraordinary time, and that's why we need an extraordinary step. But we still very, very prudent and careful in using all the policy option and the instrument. That is very important when we have to stabilize the market, when we have to have the sustainable debt, as well as in order for us to be able to rescue the people and the livelihood of the people. So I'm more optimistic, Jeff, but as you mentioned that IMF forecast is better, We also saw an improvement on the third quarter after a very deep contraction of 5.3. We are now getting better on the third quarter, and we do hope that this momentum of recovery is going to be continued.
Managing Director, if I can come back to you. Decisions have to be made, tough decisions have to be made at the moment, and we've seen governments try and save as many jobs and businesses and industries as they can in the first wave. But is it time to accept now perhaps that not all can be saved, and actually some of the structural changes that we're seeing mean some actually shouldn't be?
It is very clear that the post-pandemic economy would be very different from the pre-pandemic economy. And we ought to celebrate the innovation and the capacity of us to adapt to fast-changing environments as we mourn the people we lost and the suffering this pandemic has caused. We see the digital economy being a big winner of the crisis, and we know that when we come on the other side, digitalization is going to be embraced as a big advantage for the economy in the future. We are going to pour massive fiscal stimulus to continue to support the economy in the months to come. And already, as your question actually indicates, there is thinking about using the stimulus in a more targeted manner. Of course, in the first months, all that mattered was to prevent bankruptcies and prevent massive unemployment, and rightly so. The economy was in a standstill. Now, as we are gradually reopening, the measures that are being applied will also shift more towards supporting the workers rather than uniformly supporting the firms. But also, I would stress, this is a chance for us to build higher productivity, to build a greener economy, one that can withstand the other crisis knocking on the door, the climate crisis. So I am confident that we would see that very careful, well-calibrated direction of the stimulus in the months to come. Also, the IMF support would be aligned with a policy advice on how we can create dynamism in the economy by injecting more innovation, digital, low carbon, climate resilient. And as we do that, and I cannot say that strongly enough, of course we have to be mindful of supporting people and firms that are going to be transitioning out of the economy so they can be productively redirected. And that means emphasis on reskilling, very big time. It means also supporting firms as they exit. In other words, having in all countries sound framework for resolving cases when there are bankruptcies. In other words, good insolvency policies and practices in place. I am also very confident that as governments move in this direction, we would see private sector, which has been always on the front line of transformation, to pick up. Makes no sense to use money today to invest in the economy of yesterday. We ought to invest in the economy of tomorrow, and do so with a sense that it is important to be a just transition. Inevitably, governments would be looking for ways in which they can raise revenues. They would need to do that. we are on the view that some progressivity in taxation and also reshaping taxation towards the shape of the economy of tomorrow would be necessary and would be positive for societies. We also would like to see very much concentration on quality of spending. So a moment of transformation not to be missed.
Well, you raised the issue of taxation, so let me ask you, is it time that regardless of the views of the world's two tech leaders, the United States and China, the rest of the world pushes ahead with a digital tax, whether they like it or not?
Jeff, I'm an optimist, and I believe that ultimately there would be a multilateral solution to digital taxation. So I'm disappointed it hasn't yet arrived, but I'm encouraged that the discussions continue. It would be the optimal solution to have digital taxation that is applied universally globally. And let's not give up on getting to this optimal solution, because indeed, if it doesn't come in a way that is internationally accepted, it would come in a piecemeal manner, and we will have to then fix it because it would not be the best solution for the world. So let's keep fingers crossed. The work continues. OECD has done a really good job, and G20 hasn't thrown the towel just yet. Actually, Sri Mulyani is part of the G20. Maybe we can ask her. How does she see that coming to fruition?
We'll come to Sri Mulyani in just a moment. If I can just push on, because I'd rather actually pick up with Madame Lagarde briefly here, if I might. While we're talking about solutions that take us forward, can I ask you, President Lagarde, we've seen China's PBOC recently take action to weaken the yuan. Every time you are dovish, as you have been on this panel a few moments ago, that seems to put a ceiling on the euro. Are we seeing different blocs now view one of their solutions as a currency war, a sort of informal attempt to try and rein in any gains that are being made against the dollar?
It's a nice try, Jeff, but I'm not going to comment on exchange rate, and I'm not going to comment on currency war. This is certainly not something that we do. Exchange rate are clearly a matter that central bank governors look at very carefully. It's part of the various data and information that we factor in, particularly to the extent that it has an impact on price pressure. But that's all I would say about this particular matter of exchange rate.
The reason I ask is I thought Tobias Adrian's risk report had some fantastic questions in there about the disconnect we're seeing between asset prices and underlying economic activity. And broadly, you might push currencies into that basket. But I wonder if you share the view that the IMF appears to be expressing, that actually we are facing maybe an imminent equity market pullback or some form of credit event as a result of the kind of policies that you've implemented at the ECB, these ultra-low rates and the excessive risk-taking that is being engaged in by banks and others. I mean, isn't the SPAC just another form of dangerous financial innovation here? Do you think we are seeing a mismatch between what capital markets are pricing their products at and what this very weak growth profile looks like?
Well, first of all, I would not pass an overall judgment in a vacuum like that, because I believe that markets are very different. When you look at the US market, when you look at the some of the Asian markets, or when you look at some of the European markets, it's a different story. And there are macroprudential measures that can be used in order to address particular issues if there was the development here or there of particular, excessive asset prices in relation to the fundamentals or the underlying values. but it's not what we are seeing at the moment. And I would simply like to mention that the interest rates that we have is clearly related to also the natural interest rate, which has lowered significantly over the course of the last few years for reasons that have nothing to do with the pandemic, by the way, which have to do with demographics, which have to do with productivity and so on and so forth. So I would certainly not regard that as I don't know what terminology you use, but it's perfectly legitimate and adequate and proportional policies that we are using, in particular in relation to interest rates. And it has proven very helpful in order to make sure that economic activity could continue despite the brutality and the depth of the shock that we have seen. And I think that the facts and the numbers and the data are right here to demonstrate it.
But you mentioned earlier the pickup in cases we're seeing and the unity that we saw in Europe moving forward with a pandemic aid plan. Are you now concerned that that seems to be getting bogged down in a spat over rule of law language with Poland and Hungary? I mean, they're threatening to veto it.
Well, I'm familiar enough with the European scene, and I've attended many of those endless meetings to know that, yes, there are divergences of views, and yes, countries start from a different place in this orchestra of 27 sovereign states trying to move together in the same direction. When the debate started about Brexit, everybody was betting on the Europeans being, all over the place and the other side having a feast in picking them out and sorting out what it wanted. This did not happen. The Europeans stayed together. Everyone was having a feast about the fact that the Europeans would not be together and would not borrow together, and that in response to the pandemic there would be also 27 different responses. That didn't happen. And they together decided to go out on the markets and to borrow 750 billion euros in order to help those most affected by the pandemic. And of course, there is speculation as to whether or not they're going to agree and whether one or the other is going to actually try to influence the final decision in a very detrimental way. I don't think that we're going to see that, but it's part of a negotiation process where you have different interests at stake, and when they eventually, at the end of the day, sometimes at the 11 hours, eventually come to the same conclusion, that it's in their joint interest to be together and to be better together rather than individually worse off.
But is it worth risking a trade deal and damage to other European economies for the sake of French fishing quotas?
In that negotiation, it is clearly in the interest of all parties. And I'm sure that, you are based in London, you hear those voices. The business in the UK is very much demanding that a trade deal be concluded and be agreed. And when we do the calculation of how badly the UK on the one hand, the European Union on the other hand would be hurt by a no-deal situation, it's crystal clear that there has to be a deal. And again, there is negotiation process underway, and it might be at 3 minutes before midnight that a deal is agreed. I'm in Kristalina's camp on that one. I'm the optimistic one, but there are very sizable ego. There are lots of issues, and there are sectorial activities that actually matter, and which have proven to be critically important for many European countries, including the UK for that matter.
Dr. Ngozi, if I could talk to you about trade, given your run for the WTO. We are seeing now a shotgun wedding in the United States involving China's TikTok and a US company. Is this a realistic way to resolve security and trade disputes when the WTO is seen failing?
I want to echo what Christine said and say that is a very good try, Jeff. It's very difficult as I'm doing this run for WTO DG to comment on such an issue about TikTok and the right measures to take. But let us say this. I think that the WTO is the only organization that has rules that underpin the multilateral trading system. And this is the system that most of the world belongs to. So I think that the sooner we confront the challenges the organization is facing and strengthen it, and strengthen the multilateral trading system so we have a predictable, fair, and level playing field in trade, the sooner everyone will be able to get back to that system instead of the kind of bilateral deals or difficulties that we see countries getting into now. So that's what I'd say. Let us get back to a multilateral system. Let's strengthen that. That is what will serve the world. And let's do less of the bilateral spats that we see.
Well, you've
But
argued...
Jeff, I want to, before we continue, I really do want to make one comment. It's been very interesting listening to Kristalina, Christine, and Sri Moyani, and we all sound very optimistic. But I do want to say one thing. You know, there's a group of countries here, the low-income countries, that need to be talked about as well. These are countries, the poorer countries, who don't have the ability to have the kind of fiscal stimulus that you've seen in the developed countries or even in emerging markets like Indonesia. We've seen the rich countries put about $12 trillion in stimulus, with more on the way, 10 to 20% of GDP, whereas in many poor countries, in the African continent, for example, maybe on average about 2% of GDP fiscal stimulus. And many of these countries do not have the fiscal space with which to stimulate their economies, or even to afford to be able to pay for vaccines. And this is something that I would like us to talk about. They don't have the resources for households or corporates. So we need to think about what that means, because the world is very interconnected now. And people in rich countries can think, well, we'll stimulate our economies, we'll come out of this, we'll buy vaccines from as many sources and we'll be fine. That is not true. As long as people in developing countries and in poor countries are not safe, nobody in the developed countries are safe as well. So we've got to think of a solidarity approach. We've got to think of how we are going to work with those poor countries, be it on the health side. We are trying to raise $35 billion, for instance, for the vaccines, therapeutics, and diagnostics. And we've only been able to raise net about 3 to 4 billion so far. This is a tiny, less than 1% of the fiscal stimulus that has gone in so far in the rich countries. So let us think about this. Many of the poor countries are highly indebted. They don't have the fiscal space. On the African continent, we're seeing a recession for the first time in 25 years. The World Bank has estimated 60 million people being thrown into poverty, 50% of them on the African continent. So I think we need to bring the conversation back to how can we work in solidarity to ensure that not only people in the developed countries, we don't focus on them only, but also look at what can be done. I want to also commend the IMF and the World Bank for what they've done so far, the African Development Bank and all the multilaterals for the way they've pitched in. They've been fast, they've disbursed significant sums, but it's not enough. And we need to think about how to deal with the high debt levels in these poorer countries.
Very well said. So let me bring that to the Minister, because as you focus on G20 efforts for a further debt freeze here, it was interesting to hear Ghana's Finance Minister and the chairman of the group say it's time to get real and honest and have discussions about the cash flow capacity of these countries. I know this is going to sound harsh, but in these difficult times, maybe it is time to ask some more difficult questions. Why is the IMF having to step in yet again and provide financing to over 80 countries at this time? Is it not important that we really start to call out those corrupt and inefficient governments that are really not helping the poorer countries and the emerging countries to deal with their economies? Minister.
Well, I think the message that all countries certainly coming from a different situation. You're right in the sense that for a country who's well governed and good leadership, then you are not going to waste the crisis. Like this kind of crisis in Indonesia, we do know that we need to step in with an extraordinary measure like fiscal deficit, but as well as monetary policy, which is also supporting very strongly. But for us to be able to recover, we should not rely continuously and only for these two instruments, that is fiscal and monetary policy. You really need to work very hard. And this is exactly what the Indonesia is doing at this very moment. In this very critical time, the President and Parliament agreed to have an omnibus law, which is going to improve the investment climate in Indonesia to create jobs. So soon enough, that we are going to like smoothing this kind of transition from the support of the fiscal deficit and monetary policy. We are not going to withdraw too soon, but this reform, structural reforms should step in soon enough so that they are going to be able to continue contribute to the growth. This is exactly how you are going to work together using all the instruments available. Now, for us, in this case, when you're talking about whether you should finance a government with a commitment, I think IMF, World Bank, and other regional development bank, they have the mechanism to make sure that their debt is going to be borrowed properly. Certainly, this is going to also continue supporting the reform in those countries. So I'm not going to be like that skeptical. At the same time, many of these countries really need a support. So the DSSI, which is now being discussed within the G20, is going to be one of the initiatives in which international community should look at the debt burden, especially at the poor country, so that they are going to be able not only surviving this crisis, but also recovering to their growth path. For us, of course, the continuous support by international community, not only on the recovery path, but also in terms of the vaccine access is going to be critical. But I also endorse the need that this is not just the fiscal and monetary support. We need to restore the trade and also the capital flow, because and capital flow, especially in the form of foreign direct investment, is much important than the short-term capital flow. And this is exactly what all countries need to do. If you're not going to waste your the crisis, we really need to work hard at this very moment. And I'm very lucky in Indonesia because we have a good support from the parliament. So we have a very timely support approval on the fiscal side. We also have a very good discussion with the central bank. We also can signaling to all, especially stakeholder, rating agency, bondholder, so that we are going to have a much better coordinated in terms of what kind of policy framework that the government is currently doing. And we are very transparent. On the fiscal side, I'm the one who always promoting transparency, accountability against all this corruption. We are very transparent about how much money we collect, how much money we borrow, how much money we spend for what, and also in terms of how we are going to be audited independently. I think with that, then we are going to have a trust from the people, as well as the trust from the international community and bondholders. I'm also want to endorse what Kristalina mentioned earlier, that this is also a good time for us to design the recovery path, which is not just restoring growth, but we have to look at the gender lens. So for example, most of the social safety net and small medium enterprise support, they are going to benefiting women. Don't forget that COVID is hit mostly for the women. Most of the health worker, they are usually also women. So this is all going to be very vulnerable for many of the women in many countries, which is going to also need to be supported timely and effectively. Second one is also related to climate change. We can design the reform as well as the recovery path by putting the climate change in our design. in order for us to be able to continue growing without emissioning the carbon which is need to be avoided. And that can be done with the fiscal stimulus, or in this case incentive, that is providing a signal for more renewable and greener project. These are all the ones that Indonesia is currently doing. So we are using this crisis in order for us to be able to transform the economy. I do hope that other countries are also taking the same step, because this is exactly how the goodwill of the international community can be then matched with the commitment and leadership, as well as the ownership of each country own program, that they really want to do the right thing for their own country, and they really like doing it. So they walk the talk and they prove it. I think this is going to be one of the most important. As everybody said in this forum, the coronavirus or COVID is all country problem. It cannot be solved by only one single country or one region. All countries need to be also in a table to be able to address this issue. And that's why the collaboration at the international level is going to be very critical.
Which brings me neatly back to the managing director, because clearly leadership matters for the bold action that you have all outlined is necessary during this panel to deal with the debt, to deal with the pandemic, to deal with inequality, to deal with carbon reduction. So, Managing Director, let me ask you, how pivotal for the reset and for the bold action for all of these things is the outcome of the election in the United States in 3 weeks' time?
Let me say that we have seen an incredible mobilization, and everything that has been done in these last months to sustain the economy that could have collapsed is done because all countries come together. And we have seen a remarkable attention to the both negative and positive spillovers of domestic actions. In fact, what we saw in the United States in the first stimulus was in the $2 trillion to plug in support for the IMF, so we can do on a massive scale support for other countries. And in that sense, I think that we will see continuing on the same path, because one, very clearly vaccine policy is an economic policy. And it can only work if it works everywhere. We actually calculated, being the IMF and crunching numbers, that if we have an accelerated vaccine everywhere, not patchily here and there, by 2025, we will generate additional $9 trillion just by doing something that would be done together rather than separately. So I think we will see that course of action. And two, what we recognize today is that unless we are all coming together, we might see a very dangerous scarring for the world that goes a little bit in Ngozi's point. We have been converging for the last decades, developing countries, emerging economies doing better. But in this crisis, because advanced economies have much more capacity to act, we are seeing a risk of divergence. And actually, Ngozi mentioned Africa being a negative growth this year, minus 3%. This is bad. What is even worse is that for next year, we are projecting Africa to grow 3%, which is lower than we are projecting for the world as a whole. Emerging markets, developing economies ought to grow much faster. They have the youthful populations for themselves, but also to lift up the world economy. So I do see that need for cooperation, and I can tell you from where I sit, we will relentlessly be making the economic case why acting together is better than acting separately.
But just on that issue, and I know that you've neatly avoided answering the question about the US election, understandably for political reasons, but it seems the multilateral response has been less than it was back in 2009. The IMF has the capacity to sell gold reserves. It could have the capacity to issue new SDRs if Washington would buy into that. So it does matter, doesn't it, who's in the White House?
So Jeff, I am going to push back on you on this. And I would push back on you also because of my colleagues at the IMF who have worked relentlessly day and night. First, let's look at where we are today. People keep saying, oh, the global financial crisis. Today, the IMF has 4 times more firing power than it had then. Prior to the global financial crisis, the IMF had 250 billion total. Now we have 1 trillion. And we have used 280 billion. We still have 720 billion to boost the economy of emerging markets and developing countries. Secondly, what we have seen from the membership is incredible. Not only our membership very rapidly confirmed the ability for us to draw on this lending capacity. And by the way, Christine, thank you. You started it. I finished it. We have these resources. But when we call on the membership to do something, for those that have less resources, the response is outstanding. In April, I asked for $17 billion more concessional resources, primarily for the low-income countries and some small island economies. We now have 22 billion, and we will get even more. And of course, you're right to say there are other instruments that we may need to deploy. None of those is off the table. When I called in March for the issuance of new allocation of SDRs, markets were closed. Indonesia couldn't raise money in these days. Because of the massive liquidity, markets opened up, and emerging economies with strong fundamentals can tap into these markets. So my preoccupation, low-income countries, those that are cut off markets or have to pay prohibitive price for access. And this is where the attention goes. So I would be, sometimes we have to pause and say, are we doing ourselves a favor by trying to convince ourselves that the world is falling apart? I don't think we are. And I actually think that the world, yes, it is much more diverse today than it used to be. But it is interconnected world. And my impression is that the pandemic has brought some soberness everywhere. We recognize our interdependence more. And above all, what I see in this crisis is men and women stepping up, women particularly decisively, and that I think we all need to welcome.
Madame Lagarde, let me tempt you in on the question of a reset. You have made impassioned comments here on this panel about the need for monetary and fiscal to work together. We opened the conversation talking about the lack of further stimulus on the fiscal side in the United States. Do you hope that we get the opportunity for a fresh political wind blowing from Washington?
I'll tell you something. Whatever the wind is, economies will do better when there is a bit of certainty around. So I'm not directly answering your question, but I think that the uncertainty is something that investors, people who are wondering whether they're going to start a new job, create a company, borrow money, they want to have certainty. What is governing our decision making at the moment is uncertainty. So the less there is around, the better we are. And I think that, comes early November, we'll be in a better place on that front of uncertainty that prevails in the United States. Hopefully there will be other uncertainties that will be lifted on this part of the pond as well. But given that we're getting close to the end, I would just like to say, Jeff, that as we all indicated, many people stepped up to the plate. And in a funny way, while separating us, this virus has brought us together because we were all in it and all confronting the same issue. I just hope that vaccination is not going to divide us. And on that particular front, I think that while there has been a lot of criticism about globalization, about international trade governed by WTO, clearly trade is picking up. Trade is working. There's a degree of stabilization that is coming about. When you look at certain numbers in terms of manufacturing being up, import and export picking up as well in various places, particularly those that are now coming out of this pandemic. So we don't know whether globalization is going to continue to expand, but let's recognize that it has served us reasonably well most recently. And when it was a question of delivering masks, of receiving therapy, of trading amongst ourselves and picking up again on that, it has been a good thing. So let's not just draw the conclusions that is going to be everyone for himself, that is going to be protectionism all over again, that is going to be this war or the other. And let's look at how we can, as we have been brought together by this virus, also be brought together by this vaccination. And I would like to salute the work that Ngozi is doing in that respect, because clearly it has to be not just for some who can afford it and who can sort of book their ticket first, but it has to be for all. And hopefully we'll be able to demonstrate that we are in this together and will stay together, including through vaccination.
President Lagarde, thank you. And as you point out, we have come to the end of our time. So I want to take the opportunity to thank you all. IMF Managing Director Kristalina Georgieva, ECB President Christine Lagarde, Indonesian Finance Minister Sri Mulyani Indrawati, and Gavi Board Chair Ngozi Okonjo-Iweala. Thank you all for being part of our CNBC panel. This has been the CNBC debate on the global economy. Thank you all for watching, and we'll hand you back to our US colleagues.
Yeah, Kelly, that's right. What we've got going on here is a three-way negotiation with three different positions less than 3 weeks before an election. And that's not a real recipe for success in Washington, D.C. As you say, the president was on television this morning committing to going bigger in terms of a dollar figure. Here's what he said.